Hello everyone and welcome into the channel. My name is Brent and in today's video we're going to go ahead and cover the M1 Finance dividend portfolio recap for the 4th to the 8th of 2022, April, right? So we started this portfolio with $0 just 4 years ago and we've been adding to it just every week a little bit over $100. This is, an individual out there this can be easily done by cutting back on going out to get those coffees, drinks, anything miscellaneous, cutting back on eating out on lunches, dinners, and just kind of focusing on needs versus wants. It's easily available to kind of save $100 a week. And that's what we have done in this portfolio, just putting away $115.38 over 52 weeks is $6,000. So this is kind of what we're showcasing here on the channel. Now we're going to cover 5 areas. Number 1, the overall performance of the portfolio. Number 2, the weekly performance of the portfolio in comparison to, say, the S&P 500, Dow Jones and such. Number 3, the activity. What did we buy? What did we sell? What dividends came in within the last week? Number 4, what is the portfolio's current dividend income? Now this portfolio is mainly generating dividends. So we're going to go ahead and cover where those dividends are, kind of coming in from. And then number 5, what are we buying? So we're going to go ahead and go through this portfolio recap pretty quick. So if you guys have any questions for me, let me know down in the comment section below and let's go ahead and get into the video. So jumping over into number 1, the overall performance of this portfolio. Now we are almost back at all-time highs here. Our all-time high from what I remember was roughly 77.77%. I know that's pretty crazy to see all sevens, but I do remember we had a high of around that point. Now, as of this week here, we can see that the week, take a look at the quarter here, we're actually at all-time highs within the portfolio. We've just now this past week hit all-time highs within the portfolio. We're still down just slightly over the quarter, over the year to date, we're down by roughly 0.85 just because of those earned dividends helping kind of pad the total market loss of our portfolio. But overall, we're doing really well. We can see market gains of 9,451, and this portfolio has been active since January 8th, 2018. We made our very first video on this, creating the account, choosing the Roth IRA, the whole game plan of why we were investing in it. And we've been kind of journeying this whole process. That way, kind of showcasing what exactly anyone out there is able to do. I started with $0 and been adding to it a little over $100 every single week, regardless of market downs, market ups, doesn't matter. We just add a little bit into the market and just let it go. And then, yeah, we're at $3,170 of earned dividends now. We've now made half a year's deposit into a Roth IRA and dividends alone. We can see that overall, the portfolio was generally positive. Our best positions are Apple, AbbVie, and ABM Industries. Our worst positions right now are Starbucks and Clorox that are both negative. Starbucks recently had some weird news. We had the interim CEO come in, and he recently announced that they are going to discontinue buybacks of Starbucks. And that caused the company or the stock price to plummet by 10% just last week alone. So this was kind of on a downwards trend. I don't believe it'll last long. So, it's just kind of interesting. And Clorox is on the up and up. At one point, they were down a little bit further. But in recent times, they've actually been, recovering, which is pretty interesting to see overall. So I don't see anything negative there. Obviously, they're negative in the portfolio, but overall, we're pretty positive overall. Now, weekly performance here. Let's jump into the weekly performance. Now, week by week, we check this out in comparison to, say, the S&P 500. So last week, we made 0.94% return, $376 in market gains, $32.95 in potential in the future earned dividends. We can see that our big winners of the week here were AbbVie up a whopping 7.55%, followed right behind by Pfizer at 6.98%. Colgate, let's check out Colgate. Colgate's kind of bouncing at 5.01%. Then we have a few random names here: Merck, ABM, Cisco, Lockheed Martin. Lockheed Martin has been on a tear for quite a while. This one's actually put on quite a bit of gains here recently. So it's pretty interesting. I don't know when they'll be able to pull back, but I definitely think that they are due for a pullback just because of how much they have grown in the short term. And Clorox, I know this is one of our negative positions here, but it seems to be doing well and kind of bouncing forward. And then our worst positions this week, obviously Starbucks. The CEO came out announcing they're no longer going to be doing buybacks. That really affects the price overall, the earnings per share, and potential in the future. So that immediately took a dive by, say, roughly 11%. IIPR, that's a REIT. Siggy Selective here, down 4.59. Apple took a bit of a hit this week, down 2.42, and so on. So overall, we were positive for the week by 0.94. If we compare that to, say, the S&P 500, the S&P 500 took a loss this week of 1.27%. Year to date, they're still down 5.83%. So we're in the first quarter of 2022 now, sorry. We are almost at all-time highs, right? So we are definitely doing better than a lot of the indexes right now. The data for this one isn't pulling, so I'm not sure what is going on here. But I believe that the Dow Jones kind of had something in similar comparison to our portfolio. The NASDAQ here took a bit of a 5-dip dive, down 3.86 potentially. I'm not sure if this is accurate, but it shows down 3.86. I don't know if you guys know in the comment section below if this is accurate. Russell 2000, not showing anything there. So the main one that we kind of have available for us to kind of focus on is the S&P 500, and that one is down this week by 1.27%. So overall, we did pretty well. We actually outpaced the S&P 500 and have been outpacing it overall. The 1 week performance here, we can kind of see where the big losses are, right? Tech up here, technology, we have communications, consumer semiconductors and such. Now, we obviously noticed AbbVie and Pfizer were our big gainers this week, and that is the brightest portion here in the healthcare sector of the portfolio. So AbbVie right there, 7.55, Pfizer, 6.98. These all sort of match within our portfolio. We have Merck, AbbVie, Pfizer, Johnson & Johnson, all within our portfolio. And a lot of the financials took a dive this week, which is really unexpected. With the potential for raising rates a little bit faster than anticipated, I would assume that financials would do really well, but Bank of America there down 3.01, and JP Morgan down 1.34. So just kind of interesting to see oil continuing to climb. Exxon up 4.47, Chevron 3.48, and so on. So pretty interesting there on the week. So number 3, let's dive into the activity. Now, I don't think we made a video last week. I've been really bombarded with taxes. I'm doing my own personal taxes. Being a W-2 employee is completely easy. You just go in there, you basically sync your account. But beyond W-2, we do a lot of options. I do a lot of dividends now in my taxable account, so I have to import from my existing Webull, my Merrill Edge, my M1 Finance. I canceled my Robinhood now and public accounts and stuff like that. And then on top of that, I also run a real estate business. I run my YouTube media business. I also stream. So I'm getting different sources between 2 different YouTube channels, Facebook and stuff like that. And then my wife started her business last week as well, or last year, doing like an Amazon resellers business. So we've been kind of bombarded doing taxes the last few weeks. So I didn't make a video, I don't believe, last week, but let's go take a look here. The 28th, basically 2 weeks ago was the last time we did anything with our portfolio. Kind of just runs off without our need anyways, right? So we did purchase Lowe's, 77.62, and Starbucks, 77.63. And we have had some dividends come in since then. So we've had $2.98 from Main Street Capital, $14.60 from DLR, $4.89 from UGI Corporation. That is one that we're no longer going to receive in the future because we did cut that one out of our portfolio. And we had Merck. Check out that dividend right there for Merck, a whopping $17.45. Putting our total dividends for the past 2 weeks now at $39.92. That's pretty nice. Over the past 2 weeks, getting nearly $40 in dividends. We've also deposited here $127.66. I don't go out and get coffees I do work now 5 days a week in the office. I've started going back into the office. I do get my salads from Costco, so I buy like a 4 pack of salad for I think it's $13 and some change, and then I drink some water. I have apples and oranges versus going out to eat. It gets very expensive right now. You can buy yourself a lunch right now, and you're spending roughly $10 to $15 just on the meal itself. And you process that over a 5 day period, that's $100 to $150 just on lunch alone. That's not including any coffees or drinks and stuff like that. So I really try to minimize how much I spend external, now that I'm working out of my home. But we'll see. And then we made our deposit there, 127.66. I think that's pretty reasonable, to hit on a weekly basis. And between all the dividends and the 2 deposits that we've had within the last 2 weeks, we have $295.24 to invest. So that is the activity over the past 2 weeks now, right? And our current portfolio income. We've actually updated our dividend tracker since then. We did our 1 month portfolio recap just recently. So if we take a look here, we have 43,893. If we go into our holdings, we can see that our holdings here is 43,893. So this is all accurate. So our portfolio is currently generating $1,157 of annual income in this portfolio. So whatever we do going forward, this portfolio will generate roughly 1/6 of how much we can contribute to a Roth IRA. The Roth IRA maximum contribution is $6,000. This is now producing 1/6 of my maximum contribution, all within the first, the 4th year. So give it just a few more years with the power of compounding my deposits of $6,000 per year. This is going to increase pretty substantially. I believe by next year, we should be able to get to $1,500 of annual income. The following year, I believe we should be really close to say $2,000. And it just continues to compound from there even faster, just because of how much we're generating inside of the portfolio and being able to contribute the $6,000 on an annual basis. So I think that'll work out itself and continue to really grow pretty quick in the future. So there's no updates here as far as our portfolio income goes. That's just the current portfolio dividend income. Now off to where we are buying. Now for this, I focus on my last quarter. I'm taking a look here at my quarterly companies here, what's inside my portfolio, what has taken some losses here. So I went through and I went with my biggest loser, Stanley Black & Decker, all the way to my not so biggest loser, Apple, right? And I put them into my fundamental charts. So Stanley here, Stanley Black & Decker. When I take a look at this, obviously it's on a downwards trend. There's really no end in sight. It's kind of going sideways right now, but at any time, it doesn't have anywhere of support. You'd have to go back nearly 3 years here to look at support back in 2020, and even then, there's still quite a bit of falling here. To say 120s, it could lose another $20 before it hits this not really support, but potentially resistance at that 120 mark. But right now, it's just on a downwards trend. I'm not adding anything to it. I'm not buying it at this moment. Next is JP Morgan. Now, JP Morgan here, this is kind of an interesting one. Rising rates. No, I think I said it correctly the first time. Generally, it's pretty positive for JP Morgan, but I have seen this one kind of on a downwards trend. We also have the death cross here. The short-term 50-day moving average crossed underneath that 200-day moving average, showing that it's on a downwards trend. Now it does have some support, double bottom right here. Second double bottom was actually higher versus the first, showing signs of, positive, but it didn't quite make it to that 50-day moving average, retraced, and is now looking to kind of come back. It didn't actually fall below its existing bottom, so I think this is pretty positive. This could be a potential buy for me. I'm not going to hold off on buying more JP Morgan. I think long-term JP Morgan is a great company. I still haven't added how much I really want to have added to it. Now, Clorox here, this is an interesting one. Kind of like how I told you guys just a little bit ago, I have seen some recovery here in the short term. As of, say, mid-March, it looks to have just been going on an upwards trend from maybe like about 130 now to 146. It recently broke through the 50-day moving average. Now, If this continues, the 50-day moving average access support, this could be a good time for new investors or existing investors to take a look at Clorox. I think, if you are looking at this one, this could be a good sign to kind of maybe buy a bit and see if it, or just wait. At this point, just maybe wait, see if the market does kind of come back. Does it hold that support of 143.48, or does it kind of break back through and go even further? So this one's kind of on a trend. I had already invested $2,000 into Clorox. I'm not going to be adding anything more into it, but I do think it's on a positive note right here. Avery Dennison, again, looking pretty positive. Looks like it has recovered. Had a couple higher lows or higher highs. Yeah, higher highs on the way up and has been showing signs of recovery. This would be a potential opportunity as well if it can break and hold that above that 50-day moving average. Lows here, lows just kind of continue to downtrend here, but we hit a low, hit a lower low, bounced high. There's a little bit of retracement that has to happen before it even hits that 50-day, and the death cross is potentially going to happen here in the short term. So this one may be in more future hurt versus trying to add into it now. So I'm going to go ahead and remove some of these. So far, I really like JP Morgan at the moment. Starbucks here, Starbucks was at that 50-day moving average recently up until this week, where the announcement was kind of coming out with the share buybacks no longer going to happen, and it retraced all the way down and stopped right above the past low. Not quite as low, but I think that this is an opportunity. I haven't finished adding to this position yet. I'd like to continue adding into it. Stock buybacks, why it was initially kind of stopped. Now it can always get picked up in the future, kind of just chatter. Innovative Industrial, this is a REIT. The share price broke through the 50-day moving average and retraced back past the 50-day moving average. So this one's kind of just in that bumbling phase. So I'm just kind of hold off on that one. Cisco had that. It's been trending in this for quite a while. Here we are, low and high, low, high, low, high, low, high. And then here, death cross. It's on a downwards move right now. This could be a potential time to just kind of take profits a little bit, take some profits off the table, or the curve is kind of slowing down and this could bounce back. Things can happen. It can go either or right now, right? Method Electronic, this one looks to be wanting to cross back over that 50-day moving average, but has been kind of trending sideways. The whole market in itself has been doing these big old slushes of here we go up, here we go down, here we go up, here we go down. And then right now, as of March, it's just kind of been trending up and down. Digital Realty Trust, check out this one. This one's on a very nice tear. It's actually moving up. It has a lot of movement to the upside. If it can break above the 200-day moving average, that'll then act as support and continue moving higher. I wouldn't mind adding more to this one. Digital Realty Trust, let's go take a look at it. DLR, I have, let's see here, about $1,900 added into it total, right? I'm down, say, $87. It's almost kind of like at one of those max positions. That's not bad, but could be interesting. I definitely have more opportunity with JP Morgan and Starbucks. I'm going to leave those on the board, take that one out. Main Street Capital, this one's kind of in on a slushy movement, but nothing kind of pops out there. Colgate here recently had a huge move to the upside just within the last month. Broke through the 50-day, no problems. Broke through that 200-day, no problems. Market last week was a little bit kind of cooling. So I wonder what kind of brought this one up. I wonder if they had some earnings that really shot them. Happened here in the past where they just kind of shot through 50-day, 200-day, all the way up, kind of held it for quite a while, and then retraced. So I'm not sure what kind of caused this movement here. And we'll look at the 1 year here. And I don't think I have anything on the quarter. This is just earnings per share, trailing 12 months. What their expected earnings per share is $3.27. I don't know. Kind of interesting to see this one pop up as much as it had. Then Apple here has some potential support here in the short term at 168. But again, we've doesn't really act as support in the past. We can see here at 168, it tried to act as support, broke right through it, but it came right back. So I think at this point, I'm just going to wait. This one could kind of fall back down into the 160s, 150s. So this one, I'm going to let that one kind of slush around. I don't think it's done falling. So overall, what I can kind of see here is JP Morgan and Starbucks. I think those are probably the best bang for my buck here in the short term. So I'm going to go ahead and bust out my handy dandy calculator, and I'm going to be putting half and half. So Starbucks is going to get half my money. Let's go into Starbucks, select buy, punch in our capital, hit continue, confirm. And then I'm going to go ahead and buy some JP Morgan as well. What are you guys buying? Let me know down in the comment section below if you guys are buying anything exciting in the short term. If you guys are kind of holding off on the side, that would be interesting as well. Let's see here. Buying power 162.02. That's all correct. 147.62. I think I got all the numbers in there, just in different order. So yeah, there we go. Buying power $0. We're about to invest $295.24 into the market tomorrow on Monday. So you guys will be watching this video after I've already bought the companies. I'm just kind of letting you know, hey, I'm buying some Starbucks, buying some JP Morgan. I would like you guys to know, or let me know down in the comment section below, are you guys still buying in this market? Are you pulling back and kind of waiting a little bit to kind of see what happens? I'd be interested in knowing what you guys are up to. So that, I believe, is going to be it for this video. Again, if you guys have not yet subscribed, definitely go down below this video, hit the subscribe button to subscribe, hit the bell, make sure it's selected to all notifications. That way you get, notified if I release a brand new video. If you guys have any questions, comments, suggestions for upcoming videos, let me know down in the comment section below. Otherwise, I really appreciate you guys tuning in to me. If you guys have any other cool ideas or questions, definitely let me know. I do have a gaming channel as well. I stream over there Monday, Wednesday, and Friday. We talk all different things, whether it's just gaming or stocks. I know some people come in there and talk about stocks as well. So that's pretty interesting. And that is it. So thank you all, and I will see you guys in the next video. Bye-bye.